Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market. Let's talk about what has happened to Tesla stock as it ended up actually moving up a pretty respectable 3.5% after being pretty much doing a whole lot of nothing most of the day. And then the last hour or so, it did see that spike, or even 30 minutes, I think it was. But nonetheless, I'll give you my thoughts moving forward into Tesla. What I personally believe will happen moving next and all of that good stuff. So, ladies and gentlemen, if you enjoyed, please don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, if you do enjoy my technical analysis thoughts in the charts and you want to see my thoughts, post updates as the market is trading every day, mainly on Tesla stock, I have a link to it down below for my YouTube membership where I constantly share my thoughts, posts, updates, etc. Every single day the market is open. Again, mainly in Tesla stock for the first tier for $3. Sometimes other stocks as well, or $5 a month gives you access to the first tier plus, of course, NVDA in the second tier. But jumping into a Tesla closing up with a pretty respectable 3.5% actually, closing at $288 per share, which compared to the market is obviously going to be, a little bit of an outperformance once again, as Tesla is essentially, it's pretty much squeezing. It's getting a small little, maybe not small, but it's getting a pretty respectable, short squeeze, if you will, over here, as, as usual, when, stocks just completely and utterly fall. This is kind of what I was saying the whole time, you can't just keep falling. Eventually, once the shorts start closing their shorts, well, that's usually what also creates this kind of, very aggressive pressure back to the opposite direction. Now, what does this actually mean moving forward, though? Is Tesla going to continue higher, or is this going to be the top, or is it going to crash from here? Like, what's going to happen from here, right? Again, I'll give you my thoughts. I could be completely wrong, but let's talk about it. So, first and foremost, I'll start off with the daily. So the daily is pretty decent, right? The daily has good and bad news, right? The good news is the fact that Tesla, obviously with a nice push on the day, right? Nice little retrace back to 270s. It held the 21 EMA on the daily, et cetera, et cetera, et cetera. So it's looking pretty good. The daily is looking pretty solid. Our size at over 50, the MACD is still looking pretty healthy on the daily. So overall, the daily's, I guess, short-ish term momentum. And I say short term because you have to remember structurally we're still in a downtrend. That's, you can't deny that, right? Plain and simple. Like, we're still making overall, you have to understand, we're still making overall lower lows, lower highs, right? Like structurally, we're still bearish. But short term, yeah, it's looking pretty good, right? It's definitely still looking pretty solid. My hair flying around from my cat, I think. Yeah, it's still looking pretty solid. Now, there are some, problems. It's not perfect, right? What are the problems here? Well, first and foremost, which one do I start with? I guess the first one I'll start with is going to be the actual candle on the daily. Now, the candle, it did print pretty much an absolute textbook looking hanging man candle. Hanging man candles are essentially hammer candles, but they happen, theoretically, at the upper end of an uptrend, right? Obviously, you can argue that we are in this kind of short-term uptrend, right? From down all the way over here, right? We've been kind of, rocketing up, right? And now we're essentially printing a hanging man candle after essentially rocketing up, we'll say about almost 30%. Pretty damn good, right? So that's number one, right? We are technically printing what, in theory is a topping candle pattern. Now, my personal opinion, and you can see, these are all examples. You have a hammer candle here, but you have a hanging man candle here, right? So you can kind of see an example of what they look like, right? Hanging man candles, right? This is exactly what we have pretty much right here. Now, honestly though, I'll be completely honest though. My personal experience with hanging man candles, it's kind of 50-50. I'll be honest. I've noticed instances where it happened to be the top, but I've also noticed instances where it wasn't. So it's not perfect. I'm not gonna lie. I wouldn't say it's super reliable. It's technically something to watch out for, but again, I wouldn't put a substantial amount of weight. So let's take a look at a couple examples. You can argue the fact that this was a hanging man candle all the way up here, which actually did mark the top, right? This was quite literally the top. Like it pretty much crashed ever since this hanging man candle up here. But if we go all the way over here, you can argue the fact that this was a hanging man candle right here, but instead we obviously continued up even higher, right? So again, it's not perfect. It's not perfect, right? So just, you'll see some people talking about it, and that's my personal thoughts on it. Technically it's a topping pattern or a candle pattern, but again, it's not the most reliable in my opinion, from my experience at least. Now, moving that aside though, the one thing I'm slightly cautious of is this, right? This is what I'm slightly cautious. Then we'll go to the 1 hour chart and I'll give you my more shorter term projections. We're very far away from the 9 EMA, the 8 EMA. It's not even the 9, it's the 8 EMA, right? So again, usually when a stock goes too far away from the 8 EMA, for instance, you can see here when the stock was 8% below the 8 EMA. Right now we're about, what percent are we above there? We're about 11% higher than where the 8 exponential moving average is sitting on the daily. Now again, Tesla's squeezing, right? When Tesla starts squeezing, it can always do these kind of moves, very aggressive to the upside, or if it's just getting shorted to oblivion, it can do very aggressive moves to the downside. But even when it was getting shorted to oblivion, what you can notice is the fact that even when it got very far away, ultimately, again, it doesn't happen right away. Maybe it happens the next day. Maybe it takes another 2 days. Maybe it takes another 3 days. Sometimes it doesn't happen instantly. But at the very least, on the daily, it would always come back to the 8 exponential moving average. So you have to understand the fact that we're up here and we are technically short squeezing, we're well and far away from that 8 exponential moving average. And you have to remember, this is a very aggressive moving average. Stocks don't usually stay far away from this exponential moving average on the daily, especially for too long, right? It's for too long. So keep in mind this, just because I'm saying these things, it doesn't mean it has to crash right down tomorrow to it where it's sitting at 360 or 260. No, it's not how that works. But the point is the fact that, in my opinion, the risk reward up here, at the very least, before it retraces back, or at the very least maybe goes sideways and it catches up to us, but essentially one way or another, the stock price and the exponential moving average meet, or at least get damn close to it, you're technically playing with fire on the long side, in my opinion, of course, right? It's kind of the same idea. Again, if you were to look at it like on these candles right here, and let's say you eliminated all these candles over here, right? And you were to like short here, yeah, you could have got lucky over here, but then imagine if someone that looked at this candle and shorted here instead, right? It was just really, really far away from that exponential moving average, and then the stock obviously snapped right back to it pretty aggressively, right? Even when it did it over here, again, sometimes it takes a bit longer, but then it snapped back to it regardless at some point or another. So it just depends on when it happens. And all the strength means to me personally, if Tesla continues showing this strength, which even after hours it obviously is the fact that the pullback that at some point it will of course experience, it's not just only going to go up from here, will just be a less of a pullback, technically speaking, I guess, than expected, mainly because the exponential moving average will naturally keep moving up. So technically that floor, if you will continue rising. Hopefully that makes sense. So that's kind of my perspective, if you will, on the daily chart. Now, if I guess my main 2 targets to the upside, if Tesla continues squeezing like this, which again, after hours so far, it's very much trying to, the daily chart, I'll talk about this one here on the 1 hour chart, but the daily chart will be about 305 roughly. 305 roughly is where we are currently sitting on the daily for the 50 exponential moving average. I would be genuinely flabbergasted if Tesla, in this one instance of a movement without any pullback whatsoever, ends up blasting past that 50 exponential moving average, right? So another perspective of looking at it is we're essentially doing what we did up here, just flipped, right? This was a very aggressive move to the upside, and then it kind of cooled off, right? But the point is the fact that look how far away this also was for that exponential moving average. And essentially what happened was, when you can see the exponential moving averages, even the 8 and the 21, are very far apart. That obviously shows very aggressive bullish momentum, but it also shows the fact that at some point this will end very aggressively and snap back very aggressively as well, at least in this case, because it was extremely far apart. But the point is the stock at some point did snap back to that 50 exponential moving average. As you can see, these two here, the 8 and the 21, sort of got back together closer, right? And essentially started cooling off, right? Again, the same thing will happen here at some point, right? I don't know if it'll happen today or tomorrow, Thursday, Friday, like maybe it'll take until next week. Like, I don't know how long it'll take. That's the thing I don't know. But what I do know is the fact that that is something to consider and watch for. So just keep that in mind. So that's kind of the main things I'll be looking at for the upside. And I guess the final thing I'll mention on the daily, and this is again on the more bearish side, I would say, is the fact that the exponential moving averages, even after this kind of short squeeze that we're currently experiencing, they are still technically speaking flipped to the bearish side, right? So what we want to see, what the bulls really want to do, is they essentially want to do what the bears did here, but flipped, right? Where the stock had a massive move, and then eventually ended up coming back down to closer to the 50, which we're arguably pretty close to it now. The 9 and 21 kind of caught up to each other, and then it kind of went sideways as the stock cooled off. And that's kind of what I want to see Tesla do. I kind of want to see Tesla, somewhere around here, top out, make its way down to the exponential moving averages, and then sort of in this vicinity, for a week, 2, 3, I don't know how long it'll take, but for some period of time, it essentially cools off. And then what it'll do within this vicinity is create what could be like a bullish pennant, maybe a bull flag, something like that. Like, I wanted to create a bullish structure after that. But you have to understand, especially in the daily, these things take time. It's not going to happen tomorrow. It's not going to happen by the end of the week. It's probably not even going to happen by the end of next week. It takes time. But this would be a bullish structure setup so that the exponential moving averages catch up, and this would essentially create the next movement for Tesla to kind of propel it back higher. So in other words, to make it really, really simple, I do expect Tesla, whether it's literally right here, whether it's a little bit higher, closer to, which I'll talk about in the 1 hour, about 293-ish, or, you know, worst case scenario for the bears, or I guess technically best case scenario for the bulls, is that it actually does squeeze higher, closer to about $300 per share to the 50 EMA. But one of these, somewhere in this vicinity, I do expect it to, short term at least, top out, cool off, let the exponential moving averages catch up to it, and then create some bullish continuation pattern, whether again it's a bull flag, pennant, whatever. I don't know what it'll be or how it'll form, but some form of bullish pennant or pattern, right? And that's where, you know, we would kind of zigzag there for, again, week, 2, 3, maybe a month, whatever long it takes. I don't know how long that'll take. No one can predict that. And then continuation after that. That's kind of my base case and my overall projection on the daily chart, if you were to think about it for the next, I don't know, month, let's just say, or something like that, right? Let's go to the 1 hour chart really quickly here, right? What is the 1 hour chart telling us? 1 hour chart is telling us similar things, right? Similar things. Now, we are still seeing, you know, slight bearish divergences. The bearish divergence off of today's push actually did get slightly nullified, mainly because the 1 hour actually did make a fresh higher high. So, you know, that bearish divergence is a little bit weaker now, I won't lie. But you can see, you know, we are very aggressively hugging this moving average on the RSI on the 1 hour chart. You know, we got pretty much right to it this morning, and then we ended up pushing back off of it once again. So one sign of potential weakness or short-term weakness, or a sign of potentially, okay, it's time to cool off at least a little bit, would be losing this moving average essentially on the RSI, and the RSI essentially comes back down below, which it will for sure. I don't know when it's going to happen. I don't know how much higher it'll go before it happens. I have levels, obviously, which I'll talk about again very soon. But the point is that it will happen. Unless you're someone that believes Tesla will pretty much just do this, and somehow the RSI will only go higher and the stock will only go higher, just like the bears thought the same thing would happen here, and the RSI will somehow go below zero or something like that, which obviously is literally impossible, but you get my point. So that's kind of my overall perspective on that. Now, in terms of the MACD, right? You can see the MACD, as the stock was heading higher, the MACD has been pretty much making its way well lower. So the MACD is actually showing a bit of a bearish divergence. It did make a fresh higher high in the last hour as we continued that final push. But the point is the fact that it is on the opposite end of the spectrum now compared to back here. You have to understand, I'm 100% sure the comments will be bullish, right? Everyone was bearish here. Everyone was bearish at these levels here, and now everyone's going to start turning bullish here. It's pretty much like clockwork, right? It's just always like that. When the stock is tanking, everyone's bearish, and then it rockets, everyone missed a boat here, but now they're all bullish here, so they buy up here, and now they're left holding the bag. It's pretty much a tale all this time. That's just how these things go. So caution. Again, not financial advice, just my opinion, but in my opinion, some caution up here is warranted. Like, this is not the place you chase, right? The place that you were supposed to buy Tesla was, well before this move, right? I've been saying that the whole time. Yeah, there's a risk to go lower, just like there's technically a risk, if you will, to go higher here, but it's all about risk versus reward. The risk over here to go much lower, in my opinion, wasn't as high, and now we're all the way up here, and now everyone that was bearish here will be very bullish up here. I'm almost guaranteeing it. Now, 1 hour chart, the other things I'm looking at for very quickly before I make this video too long is this fair value gap. Tesla does have a little bit of a fair value gap right over here, which is pretty much sitting at about 290, like mid to low 290s, we'll say, right? Something like that, which we're almost there even pre-market, right? So there's a chance that Tesla gets a small little pop tomorrow morning and gets right into this fair value gap, again, mid to low 290s, and then that could be all she wrote. If even that, there's a chance that we obviously sell off even before that happens. I don't know for sure. Nobody knows exactly what this little 1 hour by 1 hour price action will do. But these are the main two levels I'm looking at, with the one above us being, again, about this mid to low 290s. And like I said, if we somehow start breaking above these mid to low 290s, then yeah, there's a chance that the daily actually squeezes up to the 50 EMA, or closer to it at the very least, closer to about $300 per share by the end of this week. That is a possibility as well, if the bears really start getting squeezed out or really start covering, right? Whatever the case may be. Now, the one thing that's still, again, even with all that being said, and there is still technically more room to the upside, the reason I'm still skeptical about it, though, overall, or at the very least, I'm definitely not chasing this, to say the least, is the fact that same idea that I was talking about in the 1 hour, on the daily chart, the 1 hour, it's a similar idea, right? So we had that obviously bullish crossover in the EMAs, but one thing you have to notice is this, right? This push has been very aggressive, because you can see even on the 1 hour chart, it's been pretty much very aggressively hugging the 8 exponential moving average also on the now even on the 1 hour chart, right? That shows very aggressive buying pressure, and or really just shorts covering, whichever one it is, or a mix of the two. Now, obviously, if we open up somewhere around here at 290 or even get that gap up to 293, we'll be extremely far away from that exponential moving average. And you can see we ended up retracing back to it this morning, and I would expect the same. Again, whether it's tomorrow or probably Thursday, probably one of those 2 days, right? But yet this will obviously keep moving its way up higher. Now, one sign of weakness that you can look for on Tesla to get an idea that this movement to the upside is probably coming to at least a short-term end is a closure and essentially losing the 1 hour exponential moving average, the 8 exponential moving average. But another thing to look at is also on top of these small divergences that I just mentioned on the the MACD, for instance, is when the exponential moving averages are this far apart, I also get slightly concerned. It does show very aggressive bullish momentum, but this is things that people chase and usually are left holding the bag. But even when we look back at the sell-off over here, you can see how Tesla was selling off. Even this was a very aggressive sell-off, just as this is a pretty aggressive push-up. You can see it also hugged the 8 exponential moving average right over here as it was selling off. So we're essentially doing this, but just flipped. It's almost the exact same thing, just flipped. Like it's almost the exact same movement, just literally, if you're looking in the mirror, essentially, right? It just flipped. But what we learn from these kind of situations here is the fact that look how the stock behaves. Like, yeah, okay, push a bit more. We could be somewhere around here right now. And we get that one extra little push, let's say tomorrow, for instance, and this is that 292, 293 push right here. Like that could be what that is. But the point is that even on this very aggressive move, at some point you can see it did snap back up to that 21 EMA, which is that red line. That happened here, it happened here, it happened here, here, here. Like regardless of how aggressive the selling pressure was, it did ultimately snap back. Now again, sometimes it takes a day, maybe 2, worst case in my opinion, 3 days on the 1 hour chart, right? But the point is the fact that it snapped back to those exponential moving averages every single time, despite the selling pressure being very, very aggressive over here. And I expect that something similar like this will happen to Tesla over here, right? Now, again, the good news for the bulls is the fact that the higher the selling or the buying pressure like this happens, technically speaking, the higher the floor for that pullback. So for instance, let's just say theoretically we pull back to the 21 exponential moving average in the first hour tomorrow morning. Well, that will pull back somewhere to about 270, which is this red line where it currently sits, that 21 EMA. But let's say it takes until Thursday morning, and let's say maybe push a little bit higher and even consolidate up here. You have to understand this 21 EMA will continue making its way higher, and then by then it'll be, let's say, at 275 instead, right? It's going to keep moving up. So the point is the fact that let's say it happens Thursday instead of maybe tomorrow, then that pullback will be higher. It'll be a higher floor because now the 21 is sitting closer to 275. I hope that makes sense. That's just kind of the idea I'm trying to say. But the point is the fact that at some point I do expect it to pull back to that 21 exponential moving average. The longer it takes, the higher the floor, and the less lower it'll go essentially on this pullback that I do expect will come at some point. Again, could be tomorrow, could be Friday or Thursday, could wait until Friday. I don't know for sure, but I do think, and I'm pretty confident it will come. So that's pretty much all I wanted to mention. Again, the R side is obviously very, very overbought as well. But that's kind of the main thing I want to mention. That's, again, very long video, but there's a lot to talk about and to get the point across. So hopefully I'm making sense. Again, that's just my analysis. I don't buy puts. If I'm wrong, the only thing I'm risking is extra profit because I do have covered calls. For transparency's sake, I do have covered calls. And the only thing I'm risking is just extra profit. I'm not actually shorting. I don't buy puts. I don't do any of that. So even if I'm wrong, all I'm doing is just risking losing extra profit. That's all it is. But yeah, that's all I got for you. Let me know what you think down below. Thank you so much for watching. Peace.